Hello guys, I hope you're all doing fantastic. My name is Colin, and this is Colin Talks Crypto. It's been a little while since my last update, and I thought it was about time to take a look at the Bitcoin charts and just really dive deep into where do I think we are and how do I see this panning out? And most importantly, are we still in a bull run or have we entered into a bear market? Let's take a look. I just got back from a vacation. I'm feeling rejuvenated, refreshed, ready to go. So let's dive into some Bitcoin action. So right now, Bitcoin is around $34,000. It's been really hovering in this $30,000 to $40,000 range for quite a while now. Ethereum is $2,300. A real nice pop recently from Terra, the Luna token on the Terra blockchain, up 17% in the past week, and so on. A little pop from 1inch. These are just some of the tokens I follow. But let's look at Bitcoin specifically. This is where Bitcoin is the market mover. This is what matters the most, in my opinion, right now. That may change someday, but until it does, Bitcoin is the king. Bitcoin is the main daddy. It moves the markets. And so what Bitcoin does translates into market action for the rest of the cryptocurrencies. So right now on your screen, you're looking at TradingView. This is the BTC USD price over the past many months. And really since nearly the last 2 months, we've been in this downward trending channel. And I actually drew these purple lines quite a while ago. I drew them back around here, and they've continued to hold true more or less all the way till today. And there's been a couple of brief fake outs, breakouts to the upside, and then quickly reversals back down into this channel. And we have not broken to the upside consistently and maintained that position. And so it's really anyone's guess how long we're going to be heading downward here. So the way I see it, there's really two outcomes to the position we're in right now. There's either we continue going lower and lower and we actually break down below this lower purple trend line and we actually never test these highs again and we continue into a bear market and we continue making new lows until the next couple of years where we finally hit the bottom and we reverse and we start a new bull run. Now I give this outcome about a 10% probability right now. The second option for how I see it panning out is that we continue bouncing around in this purple channel here for a little while, going down slightly, maybe going sideways for a little while, and then eventually we pop down for a sharp, sudden dip down to anywhere from 26,000 down to 24,000, maybe even as far down as $20,000, although I don't think that that's actually likely. So my guess, this is just a total guess, is that we pop down to somewhere like 24,000 or 26,000 briefly. Could be a matter of days or weeks only. Whereupon the Bitcoin price surges back up and never looks back and continues to blast upward massively on a bull run, breaking through the previous all-time high and going to at least 100,000, possibly as high as $300,000 this bull run. That would be option number 2, and I give that a 90% chance. And this is why I think that. First of all, why the dip? Why do I think that there might be a final dip down to $26,000 or $24,000 before we resume a massive trend upward? And that's just because of the nature of these cycles. And I want to call to your attention one in particular. This is the sub peak in 2013 on your screen right here. And I strongly believe that we are in a correction of a sub peak, much like we saw back in 2013. I still hold true to that 100% to this day. Now, if you'll notice on this particular sub peak, we crashed down and then we went sideways for a long time. And then right here, if you can see under my mouse cursor, there was one final capitulation. There was one final massive dip downward. And then it shot up. It basically never looked back. It went up, 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 except for this little tiny dip right here. But basically up, 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 and then massive surge, breaking all-time highs. It basically uptrended from that final capitulation and never looked back. And I think that that is what we are going to see. I think we're going to see a repeat of that. So here we have the crash down from this sub peak, this sideways motion for quite a while. And look, it can take quite a while. And we haven't really seen a final dip a final capitulation. And I think that that's what we're going to see. And when we see that, we're going to see a ton of fear, a ton of FUD. People are going to panic sell. The weak hands are going to sell their Bitcoin. I hope you're not one of them. And the way I look at it is, if this wasn't the peak, then I'm okay with waiting until the next bull run because it's only a 3x over the previous all-time high. So really just put it in perspective. The previous bull runs were at least 17x from peak to peak, not 3x from peak to peak. So if this wimpy $64,000 peak was truly the peak, then, when we hit a bear market, I'm totally comfortable holding because really, 3x. I mean, that's not that big of a return. That's not that big of a gain from the previous all-time high. I'm in this for the long run. I'm not a day trader, so I'm okay with waiting it out. And that's my view on this. That's why I'm fairly comfortable in this situation. But like I said, I give that bear market circumstance a 10% chance of happening. And so this is why I think we're going to see that final dip, that final capitulation. This is why I'm prepared for it. I'm not going to be fearful. I'm going to be expecting this. And I would love to not see it. Maybe we'll just shoot upward from here and we'll never look down again. Maybe in a week from now, we'll be up, 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 and we'll never look back. Great. But I think that that's not as likely as seeing a final capitulation, a final dip to scare out the market and these big corporations and these whales scooping up all the cheap coins. I think we are going to see that. So I'm being prepared for that mentally, emotionally, psychologically, so I'm not shaken out if and when that possibly does happen. Okay, so that's why I think there's going to be a dip. Now, why do I think that it's going to continue upward? Why do I think that this isn't the peak, the $64,000 that we just saw? Why do I think that's not the peak? And I want to take a look at the CBBI, the Colin Talks Crypto Bitcoin Bull Run Index, brought to you by myself and Camille Monich. Now, in case you're not aware, this particular metric, this Colin Talks Crypto Bitcoin Bull Run Index score of 54 currently, as of July 7th, is an indicator based on a portfolio of 11 different metrics. And each of the 11 different metrics are on your screen right here. We have everything from the golden 51-49% ratio, the Bitcoin search term on Google. We have the stock to flow chart, the Pi cycle top indicator, the 2-year moving average, the Bitcoin Trololo trend line, the Ruppel/Nuppel chart, show me your Nuppels, Puel multiple, the MVRV Z-score, the R-HODL ratio, and the reserve risk. All 11 of these combined creates a composite score of 54 for the CBBI. And these 11 metrics are very well known and respected in the crypto space. And that is why we have averaged them into one, so that we're not using human bias and cherry picking one more than the other. We're actually taking an aggregate sum and averaging that into one score. So in my opinion, this is a little more reliable than looking at one chart by itself. Actually, I want to show you we've recreated a new Twitter bot that daily updates you with the CBBI confidence score. And for whatever reason, best known to God, the old bot was blocked, banned, and suspended from Twitter. I have no idea why. We did not break any of their guidelines. I honestly have no clue. I think maybe we used too many fancy fonts and it flagged one of their bots. But for whatever reason, we reached out. They would not unsuspend the CBBI bot account. So the new official Twitter account is CBBI_daily, where you get your fix and your dose of daily CBBI updates. So if you followed the bot before, please resubscribe. Please refollow this Twitter bot so you're updated daily with the score in your Twitter feed. We don't make many posts. It's like one per day. And if you're a new follower or you never followed before, please, I do invite you to follow this to get your daily dose, your daily fix of that CBBI score. Okay, so let's take a look at the CBBI. Why is this an indicator that we're not at the top? Now, here's the chart down here, the historical confidence score. And you can see this blue line is the CBBI score itself, and the orange line in the background is the Bitcoin price. You can see that historically there was this 2013 sub peak and it hit a confidence score of about 86. And recently we saw a confidence score of just 77. We didn't even actually reach as high as the previous sub peak, not to mention actual peak. So this is a pretty far cry from an actual peak. The actual peaks get in the range of 98, 99 historically. I don't expect it always to be that perfect, but I do expect it to be closer than 76 or 77 on the score here. Also, I wanted to show you that we recently added the Bitcoin halving event as a vertical line on this chart. You can see the last 3 Bitcoin halving events with this dotted red line right here. And I really feel that helps to orient us to the cycle that we're looking at, because there really is a very clear pattern, especially when you look at the CBBI. You can see a clear bear market bottom and then a basically straight linear line up to the new all-time high, and then a bear market bottom, and then a straight linear line up to the bull market peak, followed by a bear market, etc. See, there's this pattern, and the halving event seems to be right smack dab between the bear market bottom and the bull run peak every single time. Here's the bear market bottom, here's the halving, here's the peak. Bear market bottom, halving, peak, somewhere over here. Hopefully, right? So we've added that block halving to be a little more useful and a little more clear as to what you're looking at here. Now, I want to show you a couple of things here. So back on this sub peak, this suspected sub peak, like I said, I think it's a 90% chance this is a sub peak and not the actual peak. It is funny to me how many people I get claiming that this was the top. I get quite a few comments to that nature. I think there's a lot of new investors who haven't been around for a while, and I understand because it was a very massive sub peak. It is possible I'm wrong. Like, don't take this as financial advice. I could be wrong. And if I'm wrong, I'm going to wait till the next bull run. So I'm just betting that it's not wrong, like 90% chance. And it's backed up by all these metrics, except for, let's look at two of them. Back at this $64,000 peak, when the CBBI had reached a score of 76, I had pointed out previously that there was the pi cycle top indicator had actually peaked out right here. You can see where the green line and the orange line cross right here. And let's zoom in. And you can see that this vertical dotted red line indicates pi cycle top indicator's suggested peak, or sub-peak, as it has historically called back in 2013. And you can see that right here. We had the actual peak indicated by this red dotted line, but we had the sub-peak indicated by this dotted red line back in the earlier part of 2013, only 8 months apart. And so I strongly feel that we have just seen this kind of a sub-peak. So as I've mentioned before, this indicator is very reliable for both peaks and sub-peaks. I've gotten some funny comments where people say the pi cycle top indicator is the only metric we need. You can throw all the rest of the ones out in the CBBI. And I'm shaking my head here thinking, you need all these other metrics. This could be a sub-peak. Like, what are you talking about? This isn't the only peak on the chart. It has historically shown sub-peaks. But there's another one, and I hadn't seen this. There was actually another indicator that also showed we could have hit the top. And I'm going to show that to you guys. And I drew a line through the chart, just like the CBBI metric evaluates these charts. It actually does linear regression through the peaks and the valleys. So it draws this blue line with its algorithm, and it plots where the progress of this metric, this red line, is in relation to that. And so you can see actually we touched it right here. And so we actually had two metrics that indicated we could be at the top. Now you'll again notice that the Ruppel chart historically does indicate sub-peaks. It got very close on this 2013 sub-peak. So it's not conclusive. This is two metrics out of the 11 on the CBBI that potentially indicate that we were at the top. So here's the 11 different metrics of the CBBI. Here's pi cycle top currently, and here's the Ruppel score currently. So 2 of 11 indicated that we had either seen the top or we'd seen a sub-peak. But the lion's share, 9 of 11 metrics, showed that we are not at the top or at a sub-peak, neither. And so that is the reason why I'm 90% sure that we have not seen the top of this bull run cycle. 9 out of 11 metrics on the CBBI indicate we are not at the peak nor at a sub-peak. 2 of the metrics are ambiguous. They could be the peak or they could be the sub-peak. They're not indicating that it was a peak for sure. So really, because these two metrics, the pi cycle and the Ruppel, are ambiguous as to peak and sub-peak, really let's take them as like a 50% odds. So really it's more like 10 out of 11 metrics. If you count these as a half each, 10 out of 11 of the CBBI metrics indicate that we have not seen the top, and only 1 out of 10 indicate that we have seen the top. And so there's my 90% for you basically right there. Okay guys, so just to recap, I think we're going to see a final capitulation dip, and it's because we see that typically in these bear market corrections. There's always a final massive surge downward. We saw that in March of 2020, we saw that back in 2019, we saw that right here in the last bull run cycle, a massive dip downward and then basically upward without looking back. And we saw that with this correction back in 2013. You know, it's not just a smooth bull upward. It's not just a smooth parabolic curve. There there are these moments of extreme capitulation and volatility. And I just think that we're due for one like this. We've been following this channel downward for 2 months nearly now. And, we'll break out at some point. It's just a matter of when. And I think there's a good chance, better than not, that breakout will occur to the downside briefly. And I sure hope it doesn't. But either way, whether we break downward to 24,000 or we just kind of go sideways and then we eventually head upward, I give us a 90% odds of reaching a new bull run peak higher than $64,000, probably higher than $100,000, and could be as high as $300,000. Very likely by the end of this year, give or take a month in either direction. Could be December, could be January. And that's what I see for this Bitcoin bull run. I've had my eye on this prize, guys. I'm going to be with you tracking this every step of the way. So if you want more updates, please subscribe to my channel if you haven't already. Please share this video with your friends. And if you haven't already, please follow the CBBI_daily Twitter bot on Twitter for your daily dose of CBBI updates. That's all I have for you guys today. I hope you're doing great. As you can tell, I'm still extremely bullish about this Bitcoin bull run. And again, I just want to reiterate, in the worst case scenario, let's say that 10% does come true. We are in a bear market. It's okay because we only saw 3x. That's the most pitiful bull run in Bitcoin's history. And not to mention the fact that major altcoins, things like Bitcoin Cash and Litecoin, haven't even broken their previous all-time high. What kind of bull run is that? I really think it's not happened yet. I think that we've seen a sub peak. Things like Bitcoin Cash and Litecoin not having surpassed their previous all-time highs, right there should be a glaring red flag that we have not hit the Bitcoin bull run peak. And then you add on top of it these other 10 of 11 metrics, essentially, showing that we're not at the peak. And the evidence is just overwhelming in favor of the fact that we are not done with this bull run and we're heading higher. Have a great day, guys.